Okay, everybody. So we'll give everyone a chance to sign on while we kind of go through some of the legalities. Past performance is no indicator of future performance. We are not registered advisors. Anything said in this show, anything should be taken as entertainment, and you should always consult a professional before investing any real money. Always read the disclaimer. Get used to reading the fine print, all that stuff. Hope everybody had a good July 4th. It was kind of a sluggish morning, a little bit. So we'll just give everybody a few minutes here to sign on while we make a few adjustments. We've got a pretty good show for today after a holiday. Get our throat all prepped. So let's go ahead and get started. Okay, so today was Fed Day, right? We had the Fed report come out today. We're raising rates again. We're around that 2%. We're getting to that 2%. We're probably about halfway for where we need to be. There's some concerns with the Fed, and they were obvious. Of course, the trade is a big thing. What's going on with the United States, China, and Europe with the trade. Canada a little bit, but it's not as detrimental. They're concerned with inflation. Will inflation go willy-nilly? We're not getting the wage growth we want. There's a lot of things that are going into this Fed report today, and the language was pretty plain, and it didn't change a lot from the last report, but there were some key items in there. And you have to think. We've been working so hard for the last 7 years to bring down unemployment. Well, now we've got it to a point where we've got more jobs than workers. And that's kind of a vanilla statement that doesn't tell you the whole story. Really what it is we don't have enough qualified workers for all the jobs. So how do we solve that problem? Well, generally you bring in foreign workers, right? People that are trained already. So how does this affect with your visas and all that stuff, your immigration? You see how everything's kind of tied in together. Your immigration laws, your business laws, all these things, they all are tied together. You're in a situation right now where for 7-8 years, we've worked on bringing down the unemployment and get people back into jobs. Well, we've succeeded at that. And now we're at the point where the good jobs are the complicated jobs. We just don't have people to fill them right now. Now that bleeds into your immigration, right? Your immigration policy. How does that affect things, right? Your ability for a Google to get a high level coder. Maybe they can't get one from the pool of American talent. How does that work out? So will this affect tech stocks? Will this affect stocks in the future? That's for everybody to kind of contemplate. It was a tame report, but we knew at this point we were going to start seeing some kind of bumps in the road. I mean, look at the size of that balance sheet we have to unwind. It's no easy task. So let's give the Fed, just like we did with Yellen and the winding of it, let's give the new Fed a little bit of a chance to see if they can unwind this properly. Tariffs kick in tonight at midnight, Chinese tariffs, and there might be another list following that. There'll probably be some repercussions and stuff. So it was a concerning day for the market. The market started off really well about a half hour before the Fed announcement. It started petering down. After the Fed announcement, it almost went red, but it bounced strong off there. And you can see we closed up about 181 points. We were up even more than that on the Dow. The S&P had a nice bounce, 23 points. We were up. The NASDAQ also too participated. Tech participated. Pretty much everything across the board participated today. Your small caps are still giving you that rally. Rally looks like it's got some good legs, and that might feed into your bigger stocks. The VIX still stuck under 16. We're seeing a lot of conversation on the message boards debating this, whether it's stuck at 16 because it's breaking down, or whether it's stuck at 16 because it's going to blow up. Volatility, always a big concern, especially when you've got tariffs looming, right? In about a half hour or in about 6 hours. So that should be interesting. We'll see how that plays out with the tariffs, but it doesn't look like right now it's concerning the markets. It was a strong close. Everything kind of flew into the close. It's really a good close. Donald Trump, our President Trump, is got his list for the Supreme Court nominees down to 3 or 4 names. It looks like Kavanaugh is the favorite. Kavanaugh's probably as far as the right side's concerned, probably a little bit more digestible for the left, as opposed to, I forget the lady's name, but the big concern right now for the left is they don't want Roe versus Wade overturned. They don't want Obamacare dismantled through legal procedures. And so they're very defensive about that. And they absolutely do not want to nominate somebody that's gonna propagate those events. So it's a little tug of war going on. Now, Trump's supposed to be naming his actual nominee on Monday. So we'll see how that plays out, right? And Tesla is still the story. And Tesla actually leads into something, it segues into something we're going to start doing with our show. But Tesla, I mean, is it a long or a short? Tesla's the heaviest shorted stock in the market, or one of them. If it's not the heaviest shorted, it's one of them. And there's a lot of people that are saying Tesla, even though it's been through all this painful press, right? Literally Elon Musk challenging analysts on CNBC, challenging people right to their faces on Twitter and things like that. It's a very volatile situation. Stock's only down 8%, right? And it's still up, 200% from like a year ago or something. It's still a very, very strong stock. So what a lot of people are saying is it's not getting that breakdown, and it should have broken down by all rights. And what people are saying is that everybody that's short in it is holding, and there's just no other sellers. So if that's the case, you get a little positive momentum in the stock and you've got a short squeeze. Is it time to get in Tesla? You might want to think about that. This leads us into a thing we want to start doing with the show, and it's called study. You see this on stock pick or stock message boards like stock twits and stuff like that. Study, hashtag study. And what it is you always have to put in the study time to be successful in the test, right? The test is your trading. The studying is the study part is the studying you do up to make a successful trade. We were looking at the Tesla trade yesterday. Believe it or not, the trade team was working on July 4th. Had them all over here at the trade room because I saw it as a good opportunity. None of them were going out anyway, and they shouldn't be going out. So what we're doing is we were studying Tesla. We were looking at Tesla. So we went onto Twitter and read a bunch of Elon Musk tweets to see if we could find any signs of maybe some statement he made that's got read between the lines effect or something. And what happened was we came across a tweet that he had put, and it was right after he got into that tiff with the CNBC analyst, because he felt at the time that CNBC was just putting on analysts after analysts that were anti-Tesla. And was it true? Wasn't it not true? Who cares? It was how he interpreted it. So he put out this tweet, and at the end of the tweet, he said, are you showing your analysts results, right? Are you showing their past performance as a gauge for whether or not they're credible on their opinions, right? So guess what? You think about it. The basics of all disclaimers, if you read every disclaimer on the internet, it's always got that statement pretty much first, right? Past performance is no indicator of future performance. So as a stock trader, how do you use that, right? Because here you go, the SEC and everybody else is telling you past performance means nothing. Well, maybe if you're on a Morningstar site, or if you're on CNBC or a CNBC site, all you see is past performance, right? It's how well this fund did for the last 2 years, 3 years, 5 years, 10 years, right? 20 years. It's all about past performance. So on one side, you've got people telling you that you shouldn't use past performance. And then on another side, all the information they give you is past performance. How do you interpret that? How do you interpret that logically? And that's the question you should ask yourself. How do you interpret that logically? So you guys go ahead and kind of ponder on that, and we'll continue on that discussion tomorrow. And that's going to be our study segment. And we're going to get into how to disseminate information at first. Let's talk about our quote of the day, okay? Because it's a good one. It didn't have a name attached to it, but it was too good to pass up. And it absolutely plays to everything. In fact, let's go solo on this one. Successful stock traders do not marry their stocks. They only date them for as long as they are profitable. Bam. Words to live by. And the next one is expect and accept losses gracefully. Those who brood over losses always miss the next opportunity, which more than likely will be profitable. Absolutely. If you're good at what you do, if you're confident at what you do, you're going to be successful. You might not be successful every time. Hank Aaron did not hit a home run every time he swung a bat. Michael Jordan did not hit a game-winning shot every time he took one. But they never stopped swinging the bat. They never stopped taking the shots. And they never second-guessed themselves. They believed in themselves, right? They believed that they were able to successfully do these things, make the game-winning shot. So expect and accept losses gracefully. Look, we had a bad April, and we talk about it. We don't hide it. But we don't cry about it either. And if you look at May, I think May is when we had the 500% winners in a row and stuff. So, and that's a good lesson. We never got discouraged. We never got downtrodden. We just got back up on the horse, dusted ourselves off, and we followed our program. And do that because successful stock traders too. Here's the thing. This is a big argument too. There's always this big argument is, should you be trading short-term or should you be trading long-term? Everything you see on the internet is always about short-term trading, right? It's always make $1,500 today. It's never like what we tell you, where we'll help you make $1 million, but it's not going to be today. It's not going to be today. It's going to be over time. It's a marathon. It's not a track meet. So think about that. We never marry a stock though, and that's why we like options. Options is putting everything but the ring on our finger, right? We own the stock. We are playing the stock. We make money off the stock, but we're not in it for a long term. We're not committed to the stock, right? We'll bail any minute. So you guys, that's great words to live by. So let's kind of roll into it. It's a day after a holiday, so let's kind of make this quick today. I'm gonna go solo, and let's pop that on. That's fun to watch. So let's go ahead and look through the comments. Welcome Samuel. Welcome Savar. The first quote, hey, that true words. Haha. The first quote I had, I wish I had always applied that to my trading. Yeah, as well as my dating. Yeah, I mean, we've all been there where we stayed in a relationship a little longer than we should have. Samuel's got a good question. Is there any more news on cryptocurrencies coming to the New York Stock Exchange? Yeah, actually, there was an article on CNBC about it, and the article was stay away from it. Seriously. They're bringing, look, there's a conundrum with these things like GBTC and stuff like that. Look, they're bringing these funds to market so you can play cryptos, but they don't actually buy and sell cryptos. What they do is they buy businesses that are affiliated with crypto. AbbVie is one of them, right? There are a whole bunch out of there, right? One of our favorites, CNAB, right? SCNA. We like those ones, but what it is what the conundrum is when you buy the fund, you're not buying a basket of currencies. Like on an ETF, say you buy an retail ETF. Well, you get a basket of retail stocks, right? Same thing with the funds for the Bitcoin and stuff, the cryptos, is you're not getting the actual coins. You're not getting possession and appreciation from the actual coins. What you're getting is a basket of companies that are in the crypto industry. So it's kind of a conundrum and it's tough. And that's the SEC. They've got these regulations set and they're just not letting these funds develop. So that's what it is. And so basically the message from the experts on CNBC was that stay away from these because you're not really getting the cryptos. The impression is, right, when you buy a crypto fund that they actually are buying and selling the coins, right, and making money off the currency trading. Well, I shouldn't say currency. It's not a currency. And we don't want to confuse that, the coins. So, that's what you would, that's the impression you get, but it's not. It's just, it would just have these Bitcoin affiliated companies. So, and the fees are generally a lot higher. The risk is a lot higher. Bitcoin, I think, was down about 3% today. It's an interesting story too. The Permabull, Tommy Lee from Fundstrat, he used to be the Permabull of the S&P 500. I think he got bored with that. And, now his Fundstrat focuses on Bitcoin. He's a big Bitcoin analyst. And he says that it's still on target for 20,000. Now, he had a target of 25,000 for the end of 2018. And the big news was that he lowered it 5,000 to 20,000. So How do you guys feel about that? Do you think Bitcoin can hit 20,000? Seriously. I believe it's trading at about 58,000 right now. In fact, I can let you know right now. But you know, guys, on that study, 6,500 is Bitcoin right now. So that's a good one. That's a good one. And here, let me share that story with you guys. And that's the story with Tommy Lee there. And it's kind of, he's lowering his he lowered his target by about 20%. So, and he was at about 25,000. So let's see if there's anything else important here on CNBC before we let you guys go. So yeah, there was some other news, and it kind of affects things a little bit. Scott Pruitt from the EPA resigned. Not sure why. He didn't really give a reason, but guess what? It's probably a good thing for the Trump administration, because it's the guy's been nothing but drama one after the other, and he just doesn't seem to understand how image works in politics. So the guy just comes off as very crass, and he comes off as very uncaring, and then he has these little issues and he kind of just brushes them off like it's none of your business, and it just created a lot of controversy. Trump doesn't need that controversy right now, especially in the EPA. It's a very, very hot button subject, the EPA, right? So Trump's probably Trump accepted his resignation, the article said. So the EPA is probably going to have a new boss here pretty soon, which is big, because that's a big part of bringing both sides together too, is that environmental side. So the left never did like Pruitt, and there's a lot of reasons why that are easy to agree with. But what happened was he just was creating all these crises, and so Trump just doesn't need that. If he's going to bring the left to his side a little bit, he's going to have to do it with a more friendly EPA person, because that's really important to the left, the environmental side. So, and then let's kind of just I would just Google it. I mean, I would just Google it. Yeah, I mean, investors.com is the best information for all trading, but I don't know. If you're looking for option strategies, I would just go to I would just Google it. There's so many option strategies out there. So that's the best I can answer that. I would just go to investing.com, or not Investopedia, excuse me. Let me see if I can spell this right. Investopedia. I think that's it. Investopedia.com. But that's just very general and very basic information, but it's very complex and stuff. It can get complicated, and they talk a lot about options, and they'll define each strategy, your iron condors, your straddles, your buy rights, and stuff like that. There's a ton of different option strategies, so have fun with it. Let's see if they missed anything here. Okay, so yeah, I mean, look, it's the day after a holiday. We've got those tariffs coming off in the afternoon. Let's see how those digest. We'll keep an eye on futures overnight, and as always. But we'll be back tomorrow with another show. And you guys think about that, what we were saying about studying. Doesn't that make sense? That, hey, imagine you're a new investor and you're coming in and you want to do things right and do everything properly. And then the first thing you're told is past performance is no indicator of future performance. And then all the information on the site is all past performance. How do you digest that? Yeah. So look, we'll talk to you guys tomorrow, gang. It was a great day, very good market. We got a lot of good action out of it. Let's see how we play out overnight with these tariffs at midnight. We're still long. We're still long Snap. We're still short the dollar. We're still long a couple of banks. We like Bank of America. We like HBAN, Huntington Bank, and stuff like that. That's our favorite regional. And again, right now, our big trade right now is Snap. So we looked at Tesla yesterday, like we said, and we like our Snap play better. So if you guys are looking for fun picks, those are something we're playing. We're still bullish on the market. We think this trade war stuff is just going to work its self out of the media or out of the news cycle. And what happens is, guess what? Tomorrow, Monday is the second week of July. That means it's earnings season. Now the fun starts. So, okay, gang, we'll talk to you guys tomorrow. You guys come on back. I hope you had a great 4th of July. We did. If you need help, if you want to be a part of a revolution, if you want to be a part of a big program, fun program, you know where to click. All right. We'll talk to you guys tomorrow. Thank you again.